Hey, welcome into New World News, everybody. And I thought it was super important to let everyone know. I covered this on my other original channel, but to let everyone know here that the Amazon stock price has indeed split. So you're used to seeing it in the 2,000, 3,000s. Now you're seeing it down in the hundreds. People are like, whoa, did I lose all my money? Nope, their stock split and you are still good to go. But there are some changes, some things you have to know. So I don't want to sit here and talk about it for a long time. Let's just go over to the news story. Let's check it out. I'll show you exactly what that means for those of you that are either holding Amazon stock or if you were deciding like, hey, maybe I'm going to invest in Amazon because the price has come down like everything else has come down. Maybe it's at the bottom. Maybe it's close to the bottom and it's time for me to buy some of this and hold on to it for when there's a recovery or some sort of upswing in Amazon and I can make some money, which I can't tell you. I can't give you financial advice whether that's a good idea or not. I don't know that everything's done hitting the bottom. It still scares the crap out of me. I lost my share of money like everyone else in the markets. So I'm just being very, very cautious right now on buying anything additional, holding what I have and seeing how it plays out the rest of the year through the election and into next year. But with that said, if you already had Amazon stock and it split, there's some important information that you should know. So let's go over and take a look at it and see just what happened to Amazon shares. Okay, from USA Today, what does it mean when a stock splits and why are Amazon and Google doing them? On Friday, Amazon stock was at $24.47 a share, and on Monday it closed almost $125 a share. On paper, that shakes out to over 5,000% decline, but no one actually lost money. In fact, if you bought shares on Friday and sold it on Monday, they would have come out ahead, short-term capital gains tax aside, since the stock closed higher. That's because the company executed what's known as a stock split. First time in 23 years, mind you. A stock split means a share gets split into multiple shares. Typically, companies do the 2-for-1 or 3-for-1, but Amazon executed a 20-for-1 split, and here's what it means. A 20-for-1 split means that Amazon shareholders got 19 additional shares for every one they owned before Monday. Since Amazon shares closed at $2,447 on Friday, before the markets opened on Monday, the price of the shares after the split went to around $122 or $24.47 divided by that 20 split. Google's parent company, Alphabet, is planning a 21-to stock place that will take effect on July 15. Amazon's market value didn't change as a result of the split because share prices decreased as a proportional rate to the number of shares that were made available. Amazon said the split makes the stock more accessible for anyone who wants to invest in Amazon and give employees more flexibility in how they manage their equity. Do you lose money? Just like their market value doesn't change, your shareholders don't lose any money. And is a stock split good? Generally speaking, stock splits are a good sign because they mean that a company has done well over time, that a price of a single share is too expensive for the average retail investor. So in other words, they're trying to make this more accessible for you and I. Should you buy before or after a stock split? Theoretically, stock splits by themselves shouldn't influence share prices after they take effect since they're essentially just cosmetic changes. But Bank of America research analysts found that since 1980, S&P 500 companies that announced stock splits significantly outperformed the index 3, 6, and 12 months after the initial announcement. Over 12 months, stocks that announced splits gained an average of 25% compared to 9% in the S&P 500. Their research seems to suggest that it's better to buy a stock before it splits so you can have skin in the game before it shoots higher. But it's important to keep in mind that some of the outperformances is likely due to momentum. Once the split is executed, investors who have wanted to gain or increase exposure may start to rush for the chance to buy. Ultimately, a company's underlying strength is what drives the direction of the stock. In other words, how well is the company doing, which is what it should always be, not just how much the next guy will pay, a la crypto. That said, since Amazon made the split announcement, its stock is down more than 11% as of June 6th. But this comes as tech stocks have been facing a widespread sell-off as consumers cut back on spending due to inflation and recession fears are mounting. In past recessions, tech stocks have underperformed relative to other sectors like consumer staples and healthcare because those ones are things that you have to have, healthcare and home goods and consumer goods. Tech, you don't have to have. I know it sounds like in 2022 we have to, but technically you don't. So should you invest in Amazon? And that's the question I asked at the beginning. No, I do not think you should because I don't think this stock split is honestly going to change anything. I think that the economy is still on its way down, and I see as a $125 per share stock there, Amazon could go down. It probably won't go under 100, but I could see it going into the 105s or 110s. I think if it got below 110, I would buy it. If it got below 115, it could be like close to the bottom. I think its bottom right now is probably in the low 100s, 105s to 110s. I think we see those numbers get hit in the next month or so. So we'll have to watch and see. Come back and comment. Let me know if you intend on buying Amazon or what you intend to do with their stock or any other stocks. And until next time, I appreciate it. Hit that like button. Make sure you're subscribed to the channel. And as always, have a wonderful rest of your day.